Howdy there, folks, and welcome into today's reaction video. It's a buy one, get one free here today in this one. Two videos for me to react to. First one up here is in regards to some decisions, obviously, Elon Musk has made recently in regards to Tesla. What's going on there? I want to hear what this gentleman has to say and kind of react to that one, give my perspective, okay? Then we're going to listen to the very pregnant Courtney Garcia, who I'm like, when the heck is she going to have this baby, man? She is... Yeah, she's been very, very pregnant, let's just put it that way, for a bit. And she's usually on fast money. But yesterday they had her on speaking about mega cap stocks where she sees opportunities in this market kind of moving forward and whatnot. So going to go ahead and watch that one, react to that one. Appreciate everybody joining me as always. Thanks for being subscribed, folks. Today is the big day. It is July 4th, which means the $10 Patreon tier is open for the day. We've had that closed down for many, many months now at this point in time, and we thought we'd open it for July 4th for the holiday, obviously. To get access to that, that's a pinned comment down there. You can see the moves I'm making in the market each and every week in the Patreon portfolio through Fidelity Investments. So it's a no-brainer joining there. $10, and you get to see all the moves I make, how I run a portfolio. It's absolutely beautiful, okay? And once we close that down, it's going to be closed down for a long time again, okay? So let's go ahead and jump into this.
Good to have you here. You heard Phil, but you kind of break down the delivery numbers. We got whatever you want to call it, a 10 or 15 or 20,000 unit beat relative to forecast, and we got 50 billion in market cap added this morning, and the stock is almost at your target of 293. So how should we be thinking about the what's already implied in Tesla's market value, and where do you think it can go?
Look, Tesla for us is an incredibly powerful long-term story, as we've talked about over the last 6 months.
Something just bothered me, and I have to address this, okay? Because this is what happens, right? That gentleman just pointed out, Tesla basically up $50 billion in market cap, and yeah, they beat vehicles by 10, 20,000, whatever, right? Which the real number was they beat by a little over 20,000 vehicles, okay? And he's like, well, market cap's up 50 billion. How does that make any sense, right? You know what I could say to that? What about last year when Tesla lost over $700 billion of market capitalization? Did that make a lot of financial sense? No, okay? The stock market can be very, how do I put this nicely, okay? Not very intelligent in short-term moves, okay? And if you're looking at the stock market for these short-term moves and trying to justify how much these market caps go up or down, it doesn't make any sense in the short term, okay? It doesn't make any sense that Tesla lost over $700 billion in market cap last year. Doesn't make any sense that it went up, $50 billion in market cap because they beat by 20,000 vehicles, okay? That's the way the stock market. Over time, valuations make sense, but in these short-term moves, these fluctuations, they make no sense, okay? That's just the way it is, and, you better look at it both sides of it, okay? Because, you can't just say on the upside, it doesn't make sense. What about on the downside when all these stocks, how many trillions of dollars of market capitalization was lost last year? Trillions of dollars of market capitalization.
They did something that was pretty smart, in our opinion. They cut prices to stoke unit demand in the hopes of, over time, increasing the penetration of their FSD software. Right now, that FSD software costs $15,000, and we estimate that globally it has about high single-digit penetration rate. Over time, we expect that to get a lot higher, and we're in print saying that we think that the company should probably lower that price from $15,000 to probably something like $10,000. And so when you think about what that...
Ooh, okay, so two things. Okay, right off the bat, obviously, great decision by Elon Musk and the team to lower price of Tesla, right? It was a controversial move when they started doing this 6-9 months ago, whenever that was, right? But clearly it was the right move. Now, his point on lowering price of FSD, yeah, I wouldn't be opposed to that, but what my stance on that is. They need I think $99 a month is a perfect price. I think that is the perfect price that would get mass amounts of people to sign up for it. I would sign up for my Teslas. I do not have full self-driving on either of my Teslas. It just has like the regular, self-driving dealio, right? Which we could call assisted driving or whatever you want to call it. But in regards to me, $99 a month, you got me. I'll sign up for both the cars, even though I won't use it that often because it's not like I commute to work. I work from home, right? But I can tell you, it would be fun. And so for $99, I would pay for it, right? And I feel like a lot of people are in the same boat. But we're not going to dish out $15,000 to buy a software that we're not going to use that much, right? Because we don't commute. So the hardcore drivers that maybe, you got to drive to work in Los Angeles every day or something like that, I can see those sorts of folks getting it and they have, obviously a lot of money. But a lot of us just don't see the need for it, right? And so I think $99 a month, which is still $1,200 a year, I think Tesla would be able to have an insane amount of people sign up for this. And it would be pretty much instantaneous, right? And so that's just my opinion on that. We'll see what Tesla obviously does with pricing on that long term, but I really think I think $99 a month, man, and it would be ridiculous, the penetration. How many people would sign up for that? Oh my gosh, okay? So we'll see, but don't be surprised if they go $99 a month down the road.
As to the margin profile of the firm over a long-term period, it's huge, right? Right now, as Phil alluded to, the company broke its promise and its margins, its auto gross margins were below 20%. They were 18. Now those margin expectations are subdued for the rest of the year. We think there are some tailwinds even in the near term because those price cuts kind of stopped over the last couple of months. But over a long-term period, if they could increase that penetration rate of FSD software, which is real-world AI, the margins of the firm should go a lot higher over the next 3 to 5 to 10 years.
Two things. One, don't be surprised if Tesla moves up some pricing, especially if demand continues to be really strong, which obviously it is, posting the numbers they posted, right? If demand continues to be strong, don't be surprised if Tesla raises price a little bit in the back half of this year. Second component, we have something coming here that's going to be likely a huge margin gainer. Do you know what that is? Cybertruck. Cybertruck margins should be insane. Maybe not from the initial ramp, the first 3 or 6 months of launching the vehicle, but over the next several years. Trucks, pickup trucks are usually like the best margin vehicles you can ever imagine, okay? And so don't be surprised if Tesla's margins increase in a dramatic amount next year, the following year, and for many years to go in the future. And Tesla kind of just keeps inching up those margins year after year after year for several years to go in the future. Don't be surprised at all if 2023 is a trough for these margins and they just improve quite dramatically over this next 5 years. Do not be surprised. I can tell you Cybertruck's going to likely, let's just call it add significantly to the margin profile of the company.
But the fact that when it comes to Tesla, the AI component of the story is full self-driving. It is autonomous vehicles. It is something that we've known about and has been in the market for a really long time. Why should we all of a sudden be applying that much more value to it in the last 8 months when everybody's been consumed with excitement about large language models?
No one is assigning value to anything Tesla has going on with FSD, AI, or anything like that. Let's just be clear about that. They're not. The reason the stock has moved so dramatically is demand in the economy has just been better than a lot of folks feared. And the stock shot way too far to the downside, obviously, in 2022, right? It's as simple as that. This stock's not even close to all-time highs. Tesla needs to go 400 plus to get to all-time highs. When Tesla goes to 400 plus, then we can at least start to consider the possibility of some people are talking about, AI and it actually mattering for the stock price. This is just a story of the stock got pushed down way too far. The economy's holding up a lot better than a lot of people feared. And Tesla's numbers are just a lot better than a lot of people feared. Clearly, they just beat by 20,000 vehicles in a quarter.
It's a great question. We've known about it, and we seem to be getting a lot closer to this actually hitting the penetration rate that will stoke demand even further. But importantly, I think the stock got to $100, not because people were concerned about AI, but they were concerned about vehicle demand, right? So right now what we've seen is expectations came down quite a bit in the winter of last year. Since that time, Tesla cut prices. It's worked. They've gained unit share. They've got their footing back. And what we've seen is the pendulum swing way too far into the negative camp. And right now, not only has demand stabilized, right? Margins could get better over the next 1-2 quarters. And like we just talked about over the long term.
Hold on. Hold your horses for just a dang moment, okay? This man just said not only has demand stabilized. When I think of that, I think of that means, we're kind of like flatlining growth. Let's not forget, this company just reported 83% unit growth on a year-over-year basis. So the demand for Tesla's extraordinary. This is not a stable demand story. This is an insane growth story, okay? Look at Tesla's numbers versus almost any quarter last year. I mean, absolutely shocking. I mean, as a Tesla bull, I've been shocked by how strong the numbers have been. I'm just like, how did they do this, man? How did they put up these sorts of numbers in this environment? That's incredible.
You have the Cybertruck being released, at the end of this year in small volumes. And if you look out a few years, there's a lot of earnings power here. A lot of the stocks that we talk about in our group don't really have earnings power. We cover sustainability. These are very young companies, but Tesla, who we term the sustainability behemoth, has real earnings. And if you compare it to that group of stocks that we call the man group, the 6 large cap tech companies, it's incredibly attractive for the growth. And it always has been. I mean, when we initiated on the stock last year here at Canaccord, the discount was even more. And today it's narrowed a little bit, but the stock has underperformed the man group on a 1 to 2 year basis. And we think that has a lot more room to run.
You've mentioned, George, the margin several times, and obviously they did sort of underperform even their own target. At what point, though, does that become a concern if they don't begin to improve it? I know when you're looking at growth, sometimes margins can be overlooked, but at some point, you have to want to see that build.
I think you have a really good point. So far, so good on Tesla's strategy of cutting prices and improving unit volume. But the razor blade model that we've talked about, selling units and eventually selling the software, we don't know yet. I mean, if it doesn't take off, this AI software, if the FSD software over the next, call it 2-3 years, and they don't get that margin boost, then it wouldn't have been as successful. We think it will. We think it adds a lot of value to consumers and to the world in terms of sustainability. But the jury's still out. We have to see if it happens. We're making the bet that the company has an incredibly powerful software suite and that penetration rates will go a lot higher over time.
George, great to check in with you. Thanks a lot.
Thank you.
Up next.
Yeah, so once again, I think once they lower it down to a monthly plan, a subscription, that is, in my opinion, $99, I think is going to be tremendous for sales of FSD. And once again, that's all pretty much straight margin. I think people can wrap their heads around that. And I think it's going to, let's just call it, it's going to take the profitability into a whole new era in regards to this company, the net income of this company. Because when you're talking about a business that's going to be almost all straight profit, I mean, it's absolutely incredible. Now, I want to show you guys some photos of Cybertruck here. And this was from, Franz was driving this, okay? The main man at Tesla, other than Elon Musk, Franz was driving this. And so I want to show you a few of these photos of some things I thought were interesting in regards to some of this video. Somebody basically got to record Franz, okay, driving his Cybertruck around. So first thing I just, just kind of video I screenshotted here that I thought was interesting is it happened, he was driving around this parking garage and it happened to be right next to a Rivian, right? And it was interesting to see kind of the size comparison of the Rivian versus kind of the Cybertruck here. And it's also interesting to see, like, because the Rivian's kind of like, I think, a really good combo of what a traditional truck looks like, but with some new flair into it, right? Where it's like, oh, that is a little bit different. Oh, that has a little bit of different styling, right? It's kind of that mixture. Cybertruck went completely different. It's like, this is not what a truck looks like at all, but this is the route we're going and this is what we're going to take, okay? And so it was cool kind of seeing it next to a Rivian. And the more you see it next to a Rivian, the more you're like, gosh, a Rivian actually looks so dang basic. Not that that's bad, and some people like the traditional truck look, right, of like F-150s and Silverados and whatnot. But when you see a Cybertruck parked next to a Rivian, you realize, oh my gosh, like the Rivian almost looks so conventional because the Cybertruck is just so much different than obviously anything we've ever really seen before, right? Now, something else I thought was fascinating that I just want to screenshot for you guys was look at the back wheels. Look at those back wheels turning. Like, that's incredible, right? And so, yeah, very, very interesting technology. Obviously, they got a Cybertruck, and it's going to be exciting to see this baby obviously get out there en masse and the sorts of numbers that this is going to put up. Because, we do know there's a huge market for some of these more expensive trucks, right? When I say expensive trucks, I'm talking about the $60,000 and above. And a lot of guys love to drive these trucks specifically, right? And not everybody even uses, actually most people I know don't even use their trucks for actual work. If most people that use a truck for actual, like, let's call it physical manual labor type jobs, they drive like, a crap truck, like, something that's just really beat up. something that's just, old, dented up, because at the end of the day, you're going to take your $80,000 truck onto the job site to get it all dented up? I don't think so. Okay, you're going to take some old pickup that, it's got 200,000 miles on it in regards to that, right? All right, guys, next up here, Courtney Garcia, the very pregnant Courtney Garcia. We're going to see what she has to say about megacap and where she sees opportunities in the market. I want to react to this one as always.
Garcia of Payne Capital Management, welcome. Thank you for being here.
Thanks for having me.
So I've had an unwavering bear versus an unwavering bull to start the show today. How would you describe yourself as we make the turn here to the second half?
We have been a lot more bullish. We really have been all year, and we remain bullish going into the second half of the year. I think really what you're seeing is the economy continues to be in a better place than people expect. The consumer is still spending. You're seeing GDP revisions are going higher. Earnings actually are not falling a cliff like people expected. And, you're finally starting to see the broadening out of this rally, and I think that's a lot more indicative that there's still room to run in these stock markets rather than just this magnificent seven that's been holding it up this whole way.
Just because earnings projections are what they are doesn't mean they're going to live up to those projections, though. What makes you believe they're right?
Well, I think ultimately it's going to come down to, is the consumer still spending, right? And people have been worried the consumer is going to fall off the cliff, but that is a majority of our GDP here in the United States. And I just don't see that falling off a cliff anytime soon, which is really what will affect these companies. You're saying wages are continuing to stay stable, which is keeping people spending. People's savings has not come down as fast as it was expected. There's also about $7.6 trillion in unearned income. So people have money in cash. There's actually record levels of cash on hand. That cash finally paying them some interest. So that's money on top of the wages that are there, and it's going to keep this consumer going.
So you don't think that the market's too expensive at the multiple it's trading at right now?
Parts of the market are, yes, and I think that's where you don't want to be chasing a lot of your long duration, especially your mega cap techs.
So you think mega cap techs are too expensive?
I do.
Okay, so what's going to happen to them in the second half then?
I just don't think they're going to outperform to the same magnitude they have been. I don't think they're falling off a cliff. I'm not calling for a bubble or anything like that, but I'm not actively adding to those categories right now. We absolutely want to own them, but I think there's plenty of other areas in the markets right now. I think if you look at industrial.
Before she gets to where she sees some opportunities here, yeah, I agree with her in general. I definitely don't expect the big dogs to run the way they did in the first half, in the second half. There is still some room for upside in stocks like Amazon, in my opinion, in stocks like Meta, in my opinion. So there's a few opportunities there that I think have a little bit further to run. If Nvidia comes out with another shocking earnings report, then that one still will run even more, even though people are like, oh my gosh, it's 400 plus now. Doesn't matter. If they come in with another shocker on those earnings, it's going to fly further. You'll be 500 plus push and 600 plus by the end of the year if they come in with those sorts of numbers. And so I see spots here and there that, there's still room for upside in some of these megas, but there's not going to be the 100%, the 50%, the 150% type moves that we saw in the first half of the year. No doubt about that. Let's see what she has to say about opportunities.
For example, you look at materials. I think there's other sections that are going to benefit from this whole idea of the U.S. is onshoring, and there's a lot of infrastructure boom that's going to continue to happen. I think there's a lot more upside potential in other areas of the stock.
So you think that the catch-up trade is going to be legit, that these areas that have underperformed but have started breathing a little bit heavier as we've, over the last few weeks, there's life there?
Absolutely, yes.
But you don't think that mega cap tech is going to fall back at all?
That is a big question. I mean, some of these companies have gotten overly expensive, and I just don't think I can justify it at a certain point in time to continue adding money there. As a long-term investor, you absolutely want to own those things, but no, it's really, when you're trading 50 times earnings, where the S&P is trading less those 7 companies that are doing really well, 15 times earnings, why pay that kind of multiple when there's plenty of other areas in the markets that can continue to recover?
Well, I mean, people would give you a long list, right? They would say, well, I'm kind of paying for some safety. I'm paying for great balance sheets. I'm paying where the growth is. I'm paying for AI-related growth, which we're still trying to figure out exactly how enormous that's going to be. That doesn't resonate?
And it very well could be. I mean, the excitement has been artificial intelligence, right? That's why everybody's rushing to the mega cap tech trade. But I think the question is how much of that has been priced in. I think what happens in the stock markets is people tend to overestimate what's happening in the short term, underestimate.
Yeah. So first off, I don't agree. I do not agree that everybody's just been running to mega cap tech for AI. I think there's specific stories like Nvidia that it makes sense to run to it because it's the AI story and they've got this insane growth and they're like literally the center of the AI universe. But Meta, Amazon, stocks like that, I don't think they've run because of AI at all. I think it's just people got far too bearish on these stocks in 2022. The economy is holding up better than anybody anticipated. These companies have done a lot of employee cuts, which is going to help their profitability in a massive way. And it looks like their businesses are going to be in a very strong position for the second half of this year. And I believe that's why those stocks have done so dang well, right? Apple is seen as kind of like a safety play, right? And you can make an argument whether it is or isn't, but at the end of the day, people kind of look at that as just a place to hide money where, if the market goes up, you're going to be able to make some good money there. If the market goes down, it might not get as slammed as some of the other mega cap techs, right? You look at a stock like Tesla, just got far oversold. It needed to bounce in a massive way, right? And it's done just that, and they've come in with a lot better numbers than I think anybody feared, bulls and bears alike going into this year. And so when you go through these story by story, you realize it's not nearly as AI driven as a lot of people make it out to be. It's just because NVIDIA's captures so much attention that therefore it kind of gives us like feeling around, AI in general. Microsoft has ran part because it's seen as a safety business, part because it's seen as just a consistent, we're going to grow anywhere 7 to 14% a year for many years to go in the future. It's solid. And ChatGPT, obviously major investment of theirs. So, you look at a lot of these different stories, and I just don't think it's all been driven by AI. I think there's a lot more at play here. I think AI has helped supercharge some of the stocks, but I'll be honest, there's a lot more. Even NVIDIA got far oversold in 2022. like people sold NVIDIA all the way down to $100, $110 or whatever that was, right? It's ridiculous. Like NVIDIA didn't deserve to be trading down there. It's insane. So a lot of these stocks just got far oversold in 2022. It's as simple as that.
Happening the long term. And I think AI is going to be a huge benefit for the economy and a huge benefit for your tech companies. But short term, I think a lot of that's probably already been priced in.
Oh, I appreciate those thoughts, Courtney Garcia. Thank you as always. And so hope you guys enjoyed this. Thanks for being subscribed as always. Make sure you access the pinned comment down there. Get in the Patreon tier. It's $10. It's a no-brainer. It's open today for July 4th, and you'll get to see the moves I'm making each week. I buy, either buy or sell stocks in there every single week. And I show you exactly what stocks I'm buying, show you images of the portfolio so you can see exactly how I build out a portfolio over time, this is the first year of doing the portfolio. So excited to continue to build that. Much love as always, and have a great day.